Well, I mean, this is interesting because usually I'm the only guy. Nobody touches housing, like housing sacrosanct, you know. And last time I was almost alone predicting the bubble would burst. And now there are substantial other people, and this same group was saying the overall market could be down 20%. I see more than that, okay? The last crash was 34%. That's the biggest crash we've had in history, modern history, in housing in the US. This one should take us back just to those 2012 lows. That's all we're doing with the second bubble, just back to those previous lows. But that would be 50% for the average house. And of course, so less in like the Midwest and places like that and parts of the Southeast, but more in places like the ones they're mentioning. Of course, California, Arizona, Austin, those are the biggest bubbles, the West Coast and Austin and places like that. In Phoenix, that's where baby boomers are moving, you know, Sun Belt and everybody. And so, yes, but don't expect this. Everybody's now admitting we're going to have a housing correction, but they're saying it will be mild. When people, they don't say it's going to happen, then they finally admit, well, yes, but it'll be mild. Don't listen to these people because all they do is follow the trend. When it's up, they say it'll hold up. When it's down, well, it'll be down a little. This is going to be the biggest crash in housing of our lifetime, and then we'll probably never see one again for decades. Housing does not crash as often as stocks, but these were two housing bubbles, rare in history, and the last one burst, and this one will burst the same. They're already be saying, okay, now is the time to buy. You know, no. When we get back to where housing prices were in 2012 or so that's a good way. Housing prices have been very different, unlike stocks. They're different in different areas. So it's best to target the low. So whatever the house or market you're looking at, what would that house been in mid 2012 around the last bottom? That's the best time to buy. When you see housing prices get there, and I don't expect that until at least 2024 sometime. This recession naturally would have been from 2020 into 22 by the demographics that I track. But the government, since 2009, it's just been stimulating, things slow down, they stimulate more. So they've basically taken over the economy, and they created this second bubble. This second bubble would not have happened if they had not gone to long-term zero interest rates and made housing just a slam dunk to buy and make it irresistible. So they created the bubble, and now they're going to fight it. But I'm saying yes, that it did finally break, and once you break a certain amount, especially I'm looking at stock, and I tell people looking at housing, use the stock market as your leading indicator. Okay, stocks cracked first. They've tried to stop that bubble from bursting. Well, once stocks cracked over 30% in 2022, which they did, 34% on the NASDAQ, now more recently down 38, and about as soon as we hit go to new lows, it's going to crash again. The more stocks crash, the more housing's going to follow. I say the stocks are getting ready to crash for a second time. You want to sell your house before that happens, because that's going to be alert for everybody. So really housing, you shouldn't wait at this point, because housing takes longer to crack, but it also takes longer to sell and freezes up very quickly. We did. The S&P went down over 20, I think 5%. The NASDAQ went down 38%. It worked. So we did see the crash. And you have to understand, and people in my newsletter know this, I've spelled this thing out in detail, and I'm just going on past crashes like 2000, 2002, 29 to 32. It takes 3 waves down to complete a major bull market or a major bear market. All we've seen is that first crash, and my indicators show us we've already begun the second wave down since mid-August, but it has to make new lows to accelerate and go a good bit lower. If that happens, that's only the second wave, and then further down, say in the next year or so, into 2024, we'll get a final wave down. So you can't feel like this thing's over normally until you see 3 healthy waves down, and we've only seen the first. So this is not a buying opportunity in stocks, and if it's not a buying opportunity in stocks, it definitely is not in housing. And you'll have plenty of time for buy opportunity in the house. Housing took years to turn around. Stocks bottomed last time, in early 2009. Housing didn't bottom until mid 2012, 3 years later. So housing, you'll have plenty of time, but stocks, you're going to want to get back in. Probably, again, if I had to tell people that, if I had to say, I have to tell you today when to buy stocks and I know nothing else, I would say around summer, July 2024. That's when I would expect a bottom. It's still a ways away, obviously. Same thing. Bitcoin is ahead of stocks and will probably bottom before stocks, maybe late in 2023, where stocks might be mid 2024, because it's kind of the leading sector. It goes up more, it goes down more. It's already been down 70% when stocks were down 34 to 38 on the NASDAQ and 25 to 27 on the S&P. I am predicting that, and I'm just following the same bubbles in Amazon and .coms. I'm telling you the same exact proportions, the bubble and the burst in the .coms is now 22 years later, that crypto will bottom around its late 2018, early 2019 lows around 3,250 to 4,000. And so it's still, even at 16,000, down 70%, it will be down 95% if we do the same thing we did with the .coms. So it's not time to buy crypto later, but I also advise crypto is the next big thing. The .coms were the next big thing emerging in the late 90s in that bubble. They were small. The shakeout, which is necessary, Dan, this is a good thing. You have tons of new entrants and then you shake them out to the ones that are really strong and have this stuff together. That's what the shakeout's for. That's what happened, back in 2000, 2002. And then you see the real boom, okay? So the best companies will survive. We have 40,000 coins by some count. This is ridiculous. All they are is cheap IPOs. Coins are cheap IPOs. The blockchain technology is real and will emerge after we wipe out all these ridiculous coin companies. I would be looking to buy the leaders, Bitcoin, Ethereum, companies like that at the bottom. And I'm not looking for a bottom until we retest those lows in late 2019. That's also an Elliott Wave count. That was simply a huge bubble. It was simply the fourth wave correction before the fifth wave final bubble. All we're doing, and this happens in bubbles. I've now studied since these bubbles came, all bubbles in history. Bubbles basically go back to where they started. They bubble up way beyond the fundamentals, crazy, and then they go back to where they started. That is 3,250 to 4,300 on Bitcoin. That's where it should go. Then you buy, because it could go, literally, the projections also tracking the .com bubble before the real boom. Bitcoin could go to 500,000 to 1 million. My actual target right now today is the next boom will take it to a peak of 700. You are better being the believer at first, because bubbles have a lot of momentum. You just have to be smart enough to take your profits before it's too late, because bubbles grow more rapidly than bull markets, literally 2 to 3 times the rate, but they crash twice as fast as they grow. So when the bubbles burst, it happens very fast. So it is good to go with a bubble. And this is the second bubble. And it's actually, the thing I'm telling people, it's actually tracing at a higher level the first bubble. And basically it peaked right in line with where the first bubble peaked after going up for about 5 years. So that was a good time to get out, okay? So that would have been the best thing. You might have gotten out at 50 before, or 69 at the top, or you might have gotten out at 45 afterward. But anywhere there is going to look good when it ends up back where it started at 3,250 or so.